Hi guys, how you doing? This is Vlad and I am back with new series where we will be focusing entirely on time. Yes, you heard it right. Time, the single most important concept which we should master in order to trade ICT concepts, okay? And in order to trade the markets in general. So this new series, I'm gonna go over something I've been working on recently a lot, and I am at this point convinced that it will help you massively to filter out the noise on your charts, to find exactly where reversals should happen and will happen, and help you ultimately become a better trader. Okay, so without further ado, let's dive into it. Um, First of all, how did I get the idea of this time-based concept? Well, if you remember, a few years ago in 2023, if I'm not mistaken, Michael posted a tweet where he said that his logo is actually a sequence and it reveals how the algorithm operates. And there have been a lot of talk about it since, and a lot of videos were made on it. And some people were even putting the logo on their charts and showing how price reacts around each of these circular levels, which is it looks nice on video, but it doesn't really help you to find out where exactly reversals will happen and where price will react before the fact. After the fact, after the daily range already printed and you put the logo, I agree. It's fascinating to see how price plays around these circles. Uh, it's beautiful to see, but you need to know before the fact what you can expect and where these things should happen, these reversals. But I used the same concept of the logo where, if you're not familiar, the logo is actually a Fibonacci sequence, and each circle represents a cycle. For example, if let's say the large black circle will represent your yearly cycle, the annual cycle. Okay, so from the beginning of the year to the end of the year. So this midline here is your time axis. Now, within that large circle, you have smaller circles, which will represent your monthly price action, okay, monthly cycles. And with each of these monthly cycles, you have your daily cycles, and then within each of these daily cycles, you have smaller cycles. Okay, you're gonna have the weekly, the daily, and then you can go as low as the seconds charts. Okay, so it represents the fractal nature of the market. You know, price is doing the exact same thing on all time frames. That's what Mike always says. But how do I use this information in order to arrive at the key times of day um, where I can anticipate high probability reversals? And pay attention, guys, here. If you have gone through the 2016-2017 core series of Michael, and if you didn't, I highly encourage you to do so. You'll see that what I'm sharing with you now coincides with what Michael was teaching in this series. All I'm doing is proving the concept using his logo. Okay, and the logo I used to derive a 212 power of 3 Fibonacci sequence where each circle, so we're going to use this first large circle, then the smaller one, then the last large circle. Each of these circles will represent the accumulation, manipulation, and distribution phase. Okay. Okay, and in order for you to visually see it better, I've drawn this simpler representation of the ICT logo, removing all the fractal noise that happens within. And you have here your horizontal and vertical axis, which represents your time and price expansion. Okay, so each of these circles represents a 2 1 2 sequence. The first circle is 2 times bigger than the middle circle. The middle circle is 2 times smaller than the last circle. So the first and the last are approximately the same size. I mean, they are the same size, but you'll see how this translates to the chart in a minute. So instead of putting the logo itself on the chart, I have created an indicator using the vertical FIB levels. And if you haven't used this on your chart, it's this little tool here. It's called FIB time zone. And it basically draws lines like this. Okay? It draws vertical lines so you can mark key time of day. Okay, it's just exactly the opposite of what the regular FIB tool uses in order to mark a range. Okay, this is used in order to mark time period. Okay, and I'm using a 212 sequence, and of course you can fine tune a little bit these levels. I'm using the 0.4 and 0.6. So we have, as an anchor point, we have 0, and then we have 0.4, 0, 0.6, 60%, and then we have the end of our time at 1. Okay, so this represents the 212 Fibonacci sequence, or the power of 3. Okay, now these levels are what your circles are. So imagine that in this first time range you have this bigger circle, this one. Then the smaller circle is the middle range, and then the other large circle is here, the last range of the Fibonacci sequence. So how do I use this? Now I've tried different ways to use it, but at the end of the day, it's best personally for me to anchor these points at where the teacher is telling you to do it. So where is Michael saying is the true daily open? It's not 6 o'clock like most traders in the trading community think, and how the market is actually printing the new daily candle. It's not 6 p.m. You guessed it right, it's midnight open. So what I did is I drew this Fibonacci time-based sequence from midnight open all the way until 4:15 when stock market closes. Okay, and what you will see here will fascinate you. You're not gonna see it now probably, but I've created a nice little indicator which I'm gonna share with you. You can find it in the description of this video and play with it, because it's gonna blow your mind. And let's see what this indicator is showing us. It represents the same cycles. So if you take the FIB and draw it like this, see the vertical lines, they coincide with the with these boxes, and that represents our daily cycles of accumulation, manipulation, and distribution. What? Yeah, that's right. And how do we use these daily cycles? Well, first of all, before we move to the smaller time frames, I would like to show you this and how it looks on the weekly. Okay, so we're going to use now an hourly chart in order to see how the weekly cycle pans out using this same concept for the power of 3 and the 212 sequence to represent these weekly time cycles. Okay, so if you draw your vertical fib, you'll see that the lines coincide exactly with the levels I gave you. The lines will coincide exactly with the borders of these boxes. Okay, so and actually the indicator I have created also has these lines here, so you don't even need to draw them, and you can remove them if you want from the indicator settings. But the important thing is now we have an entire weekly cycle where we have our accumulation, manipulation, and distribution phases. Okay, blue box marks accumulation, red box is manipulation, green box is distribution. These little dotted lines here, they represent midnight open. Okay, and you can observe how price reacts around these midnight opening levels. But what is the thing you should explore on your weekly chart using this concept? I want you to either draw the fibs or use my indicator. It's fully customizable, by the way. You can customize the time range and it will automatically derive the time cycles and everything. But I encourage you just to use the default settings and check for yourself when the high or low of the week will likely form. And if you watched the 2016-2017 Core Content series of Michael of ICT, you will know that he teaches that the high or low of the week will likely form on a Tuesday or Wednesday. Having drawn these cycles, look where the accumulation phase ends. Exactly at 6 o'clock on Tuesday. So that's when Tuesday opens. The electronic hours of Tuesday open. Look where this weekly manipulation cycle ends. It ends on Wednesday at 6 o'clock. Okay? So from the beginning of Tuesday to the end of Wednesday is your manipulation cycle. Your high or low of the week will form during the manipulation weekly cycle, which just so happens to be between Tuesday and Wednesday, exactly as Michael teaches. Okay. And now I want to go back for a few weeks so you can actually see it. See here, the high formed just before the manipulation cycle, but we're going to come back to that later on. Here, previous week, high of the week forms during manipulation. What is that? Wednesday at 3 o'clock during London. Week before, low of the week forms Wednesday, 5 in the morning during New York. Week before, high of the week forms on Tuesday, 3 p.m. So right before we enter manipulation phase, and then we just drop. Okay, moving on. Here we actually dropped a lower low on Thursday night and beginning of Friday we started to shift gears, but you can still see low of the week is around this level. Week before, low of the week here on Wednesday 3 p.m. and then distribution. Okay, another one highly manipulated here on Tuesday, June 9th, massive drop during New York Open on Tuesday, reached here this level. Then during manipulation we actually retraced back into this week, and look when distribution started. It started on Wednesday after the market closed at 6 p.m. We threw a week down and then we started distributing. So these are the times when Michael will say you have to grade your week and use the 50%. Look at that. And then price just goes up. All right, then another week. When is your weekly high forming? Here during manipulation, weekly phase at 9 o'clock on Wednesday, June 3rd. Okay, so you get the point. This is proof of concept. What Michael was teaching is actually hidden within the sequence of his logo. So you might say, oh wow, this looks so good. It's so simple. Actually, it is simple. It's not complicated, but you have to know how to use these cycles, and you have to know how to anticipate and where to anticipate setups to form. And this helps you visually see it when the setup forms. Okay, so now that we saw how the weekly cycles form, we can do the same on the monthly. Let's go on the the 4-hour, where we have the same thing: accumulation, manipulation, distribution. Previous month, high of the month formed during manipulation, and you can see in which days. So here is between Sunday, June 14th and Friday, June 19th. In this month is between 13th and 19th. Month before, the manipulation, actually the low of the month, this was extremely bullish month, formed in the 1st of May, and then it just went higher, higher, higher for the rest. So when you have expansion weeks where we expect the week to just expand the whole week, price to expand the whole week, you'll typically see the manipulation phase just retrace back into accumulation and then continue in the direction of the trend. Okay, so that's when you have a trending week like this. Retraces back into accumulation phase, and then during distribution it continues just one way up. Same the month before. So on the monthly you can see how the accuracy might diminish, because it depends in which annual cycle we are. Okay, but you see here during the month of March, accumulation, manipulation, distribution lower. Okay, before that, almost the same thing. Okay, monthly low. So you get the point. Okay, and then we're gonna go on the daily chart, and we're gonna fine-tune our indicator here to show the daily sessions. Sorry, we're gonna go on a 5-minute chart in order to see the daily sessions again. Okay, we were talking about this one before. Now, when you know when your high or low of the week will form, look at the same thing on the daily. The high on Friday forms during manipulation phase. Then on Thursday, here, small little manipulation up, and then we drop. Okay. Now let's see previous Wednesday, low of Wednesday forms here, 855. Okay. And accumulation, manipulation down, sweeping liquidity, and then expanding higher. Day before, actually, we never traded below midnight open, found support here during New York open, that's 10 o'clock, and then expanded higher. And you don't even have here a valid, see that? You might say it's a market structure shift. It's not valid because there's no displacement. Here, high of day, when it forms, exactly 9:40, the end of manipulation cycle. 9:45, we drop and continue dropping for the rest of the day. Previous day, manipulation happens within this manipulation cycle. 9:40, 2010s, 9:45 goes massively up. Here, trending day, so manipulation just retraces back here into the previous range, and then we continue dropping. Day before, manipulation is up. Yes, it's not the high of day, but you get the point. Manipulation up, market structure shift again here. This is your FVG 2022 model. Same here, high of day during manipulation phase. So you get the point. It's fractal, guys. It works on any time frame with high probability that your high or low of the specific session you're testing will form during manipulation phase. And when you get the indicator, you can see exactly when these hours are. So on the daily, this will be from 6:30 all the way until 9:45. That's what it is on the daily. You saw it on the weekly. It's between Tuesday and Wednesday, 6 o'clock in the afternoon. And so the best thing about this is that it's fractal. And another thing that I want to show you now is I also have in this indicator level 2 cycles, as I call them. So these big boxes, they are the parent cycles, but within them you have smaller cycles or microcycles or level 2 cycles, whatever you want to call them. So each of these daily session, daily power of 3 cycle can be divided into three other power of 3 cycles. So within the accumulation, you have the same thing: accumulation, manipulation, and then distribution. Accumulation, manipulation, and then distribution. Accumulation, manipulation, distribution. So each of these cycles can be divided into 3 sub-cycles. Okay, same thing here. Sweeping relative equal highs at midnight open, by the way. You see? Same thing. See where the low of this accumulation phase forms during its own manipulation phase. Yes, it's starting to click, huh? And it's 340. That's 330 is the reversal that Michael speaks about during London. See that? 340 candle marks the low. Going up. Then we're sweeping this. Another market structure shift, and then we continue up. So it's fascinating when you start looking at the market through this power of 3 2-1-2 sequence. Okay, it's gonna reveal a lot on the chart for you, and it's gonna give you so much clarity as to what the hell is price doing every single day. Okay, and we're not talking here about 90-minute cycles. We're not talking here about 6-hour cycles or 4-hour cycles or quarterly theory or shit like that. No, this is simple Fibonacci 212 sequence, which tells you when your setup is likely to form, when you can expect your setups to occur, where you should expect your PD arrays to form. We're going to talk more about this in the next videos of the series, but for now, I want you to take a look at the indicator, guys. I'm going to drop it in the description of this video. Play around with it and see for yourself if these cycles really reveal um, how time and price interact together. Okay, so I'm gonna drop it at this for now, and I'm gonna see you guys in the next video. So if you're new around here, if you like the content, hit the subscribe button, smash a like on the video, and I hope to see you all in the next one. I'm out.